4 questions you should be asking yourself every time that you're viewing your statement. So don't let your statement end up in the junk mail pile with credit card offers and those folks that want to check in and see how your car's extended warranty is doing. Actually crack it open and ask yourself these 4 questions. The very first question of 4 is, what do I own?
Yeah, so you want to look at your statement and say, do I know what's inside my IRA or 401k plan or brokerage account? This is one of the most important questions on our list. Without knowing what you own, it's impossible to know where your account stands.
So in each statement that you receive, it's usually a couple of pages, it should include an itemized list of your account holdings along with a ticker symbol, and often includes the name of the fund or the individual stock. There are several ways in which you can find out what you own if you're unsure. If you're a fan of research, like I am, there's plenty of informational sites out there that can give you a better idea on what it is exactly that you own. Of course, there is lots of informational investment sites out there on the World Wide Web, such as Yahoo Finance and Google Finance. There's also a ton of financial newspapers, such as the Wall Street Journal, and which gives lots of business and finance news, as well as Morningstar, who puts out a lot of information. And of course, we would be remiss not to include our own reference guide, the Next Gen Dollars and Cents, which has a wonderful glossary with lots of key terms and definitions as well.
Right, but you want to be careful about what sites you go to and how they may steer you in one direction or another. It may not necessarily be where you want to go. So one of the best places to find more information on a particular investment would be through the provider of the fund. Many companies will have informational sheets listed on their website that will give you some perspective on the funds, such as their performance information on the funds that you own. You should always be looking at the 1, 5, 10, and possibly the 15 or 20 if that information is available, to see if your performance is in line with that asset class. It's really important to do your due diligence early on, especially with 401k plans and IRAs, as those assets will potentially be invested for decades. Making smart adjustments early on can have huge impacts later on the value of your account.
And if you're not interested in doing all of the research, we would encourage you to reach out to your advisor and have a discussion on what it is exactly that you own. So the second question and things you should be asking yourself when you are looking at your statement is, what is my allocation? Because once you have the basis covered on what it is that you own, you then open the door to determining what your allocation is. Determining your allocation is very important, no matter what age you are.
So when determining your allocation, you want to review where the account stands regarding its overall mix, of which you may want to consider some changes going on in your life. Now, some believe the older you get, your allocation needs to follow a more conservative approach. We don't necessarily disagree with that statement. However, we do feel that there should be a blend of items rather than just being based on your age that are the driving factors. One size does not fit everyone. So keep an eye out if you see you're invested in a target date fund, which is very common for employer-based plans where there really is no one looking at your investment. Do you have a nice diversified investment structure within your plan of mostly large stocks, some bonds, and some international? So if you're investing in a target date fund, it may be a good time to have a professional look at your portfolio, maybe one of the certified financial fiduciaries here at Nelson Financial Planning.
Yeah, that sounds great as well. And just because you're retired doesn't mean that you need to shift to an all-bond portfolio either. Of course, in retirement, you will still need to have a growth perspective to keep up with inflation and help provide monthly income if that's your goal.
Overall, knowing your allocation is critical to understanding your portfolio and making wise choices about retirement.
Absolutely it is. So the third question that you should be asking yourself when you're looking at your statement is, what are my fees? Do you know how much money you are paying for the service of your account? Understanding the fees associated with your investment account is critical for several reasons, isn't it?
That's right, Zach. First, fees can significantly impact your overall return. Even small percentages can add up over time, reducing the amount of money you ultimately have for your goals. Knowing your fees can help you make informed decisions about your investments.
And if you're unaware of the costs, you might be paying for more than is necessary for services that you don't necessarily need. And, transparency in fees builds trust with your financial advisor as well. It also ensures that you are both on the same page about the costs and the services that are being provided.
Understanding your fees allows you to compare different investment options effectively. The comparison can lead to better choices that align with your financial objectives. Being aware of fees can help you identify any hidden charges that might not be immediately apparent. For example, there are 2 fees associated with almost all mutual funds. There's the underlying mutual fund expense charged by the mutual fund company to run and manage the fund, and then there's also the broker or financial representative fee or commission. It's critical to make sure that you are looking at your all-in expenses when determining fees.
Very important. Yeah, and these hidden fees can erode your investment returns without you even necessarily realizing it. So understanding fees can help you evaluate the value you're getting from your investment services. Are you receiving the level of service and performance that you would expect for the cost?
Being informed about fees can help you plan your investment strategy effectively, and knowing your fees can help you avoid any unnecessary expenses. This can be especially important if you're working on a tighter budget.
Absolutely. So, let's talk about some other items here. So as you're taking a closer look at your statement, that would be a good time to check your beneficiary information, making sure that you have names, addresses, and percentages correctly. You don't want to leave any undue headache onto your heirs once you pass, if you can help it.
Yeah, absolutely. Certainly here at the office, we have seen where people haven't had that planned out accordingly, and it does make it a little bit more difficult for your beneficiaries. It's also a good time to make sure that all your banking information is correct on your accounts and you don't have any old or closed bank information listed. As well, if you're receiving monthly income, you may want to check and make sure you have the appropriate tax withholding coming out of your distributions so you don't have a big tax bill at tax time.
Very, very important. So the next time that you receive an account statement, actually pull it out. Pay attention to it. Don't just immediately throw it into the trash, and ask yourself these 4 questions. Well, that's all the time we have for this week's episode of Dollars and Cents, brought to you by Nelson Financial Planning. Christina, I hope you enjoyed this program as much as I did. Well, time will tell. We'll see if they let us do this program together again or not. Well, anyway, if you like what you heard, you can always look us up on our website or give us a phone call. Our phone number is 407-629-6477. And yes, we still have live people that answer the phone when you call. We hope you enjoy the rest of your weekend. You've been listening to Dollars and Cents with Zach Keister and Christina Lamb of Nelson Financial Planning.